Well, hey, everybody. How many of you are always looking at different stocks, looking at different trades, thinking of what you want to do with them, and not always sure on what you want to trade, how you want to trade them? I'm going to show you in this video how to pick one stock and trade it with all the strategies. All right, so let's get into it. I'm going to use SoundHound as the stock that will yield for us all the different ways. We want to see all the different strategies, the seller strategies, and I'm going to use SoundHound. So I've got SoundHound on the screen, and I've documented some support over here. We've got support at 1512, support at 1306. This is on the daily time frame. So if we're going to trade these as sellers, we're going to trade them as a weekly. So you're going to, do all the things. So let's start with the put side. If we want to do number one, the first strategy is cash secured put. Basically, we're going to sell a put. You want to sell a put below support with the thought that the price won't come down here. But if it does come down here, you're going to collect 100 shares of this stock. SoundHound is $16.91. We've got support at 1512. We're going to go to the screen looking for just the weekly and maybe down around 15. 1512 was the support. We go down to around 15 as our strike price. You can even go down to 14.5 if you like. Let's make this a little bit bigger so everybody can clearly see what we're looking at. Okay, it's already at very large. Let's see if we can put it on extra large. It looks about the same. Okay, so we want either 15 or 14.5 on the puts side. I like 15, but the 66% probability out of the money could make people a little nervous. Maybe over 70% probability out of the money means you've got a 72% chance that the price of SoundHound won't expire as low as $14.50. $15 is going to yield more premiums. So I'm going to go with 15. Nice round number. You're going to select from the bid column. You're selecting the 66, basically saying that I'm going to use the 15 strike price as a cash secure put, and I'm going to collect $66. If at expiration the price is below 15, I will collect 100 shares. I will be put 100 shares in my account at the price of $15 per share, or $1,500 total, minus the $66 that the broker already gave us. All right. That's the first thing we could do. The second strategy we can do is a put credit spread. Put credit spread won't require as much collateral, but it will yield for us. It could yield for us good little premiums. It's a good little income trade. A put credit spread is when you're thinking the price is going up. It is a bullish or a neutral strategy. So I like the 14.5 as far as 72% probability out of the money. So when I change this spread to vertical, I'm going to go with the 14.5 as the strike. Now, I usually like to make this one spread, but look, if it's a 50-cent spread between 14 and 14.5, it's paying $14 as a 50-cent spread. That is pretty good, okay? $14 you're getting as a credit means that you're using collateral of $36 because it's the difference between that the two strike prices. If you go and make it a one spread, 13.5, 14.5, you collect $22. Not as good as $14 for a 50-cent spread. Okay, this is not the same. This is not that, as they say. So I might go back to the 14. Might go back to 14 and collect $14. You're going to pay a couple dollars in fees, but I probably would go with 14.5 on the put credit spread. All right, let's go back to the chart. Now let's talk about what would we do on the call side. So we can do a call credit spread, or we can do covered calls. Now, I don't know if I'd be really too quick to do a call credit spread, seeing that SoundHound is quite bullish right now. Even if you pull back and look at more data, you can see that SoundHound is quite bullish. So there is no idea of how high it could run, or how high it could move. So I don't know if I'd do a call credit spread unless I got very far away. One thing you can look at, though, if you go to the trade screen and you put this back on single, you can look over to the right. This is the implied volatility. Basically, it's the broker, what the broker believes is going to move plus or minus 3.4. So you could go up and add 3.4 to the current price. Take this up to what, 20? Right around 20, somewhere in there. Of course, you can do the, exact math. 3.4 is going to put you at 20.3 or something like that. So you could do that. Maybe you do 20.5. Actually, you can't do 20.5. It gets to a one spread up here. So you could do a one spread up, a call credit spread if you wanted up here, maybe 21. You got a probability out of the money of 77 at the 20 strike or 82 at the 21 strike. I actually like the 21 strike because there seems to be a lot of activity. There's volume and open interest at the 20 strike. So this may have people being, interested in that. So I would probably go with 21 if I was doing a call credit spread, because a call credit spread means that if it breaches, you're going to lose the money. Now, what's not so delicious is 21.22 as a spread is only paying $9. I like to get at least 10% on my spreads. But what you can do is, if you like this strike but you don't like the credit, you can take the money up to something that you would be satisfied with, or definitely wait till the market's open, because the market's not open right now, and see as price climbs, what does the value of this actually get to. And you may find once it hits some resistance and returns back, you may find a credit or premium that you like a little bit better. But I would definitely look around the 21 price, the 21 strike price. You could go with 2021. That's going to pay about $12, which is, just above, just below what that plus 3.4 that the broker set for that implied volatility. Now, what you would do though, changing to the fourth way you can use SoundHound, if you're an owner of 100 shares of SoundHound, or you have a long call going, you could do a covered call on SoundHound. You could do a covered call, which basically says that I have 100 shares at whatever your cost basis is. You want to pick it above your cost basis. So, and then you want to pick a strike that you believe, especially if you want to keep your shares, that you believe the price will not get to by expiration. So I would again go with maybe 20 or 21, 82, maybe even 22. If you want to be sure that your shares don't get called away, go with that. And okay, let's pick the 22 strike. I like that one. 85% probability out of the money, which is at 85% this trade will be fine and the stock price won't get here. You select bid. Here you're going to collect $50 as a covered call for this coming Friday for your 100 shares of SoundHound. Well, hey, I just showed you 4 different things you can do with one stock as an option seller. You can do cash secure puts, you can do put credit spreads, you can do covered calls, and you can do call credit spreads. All of these strategies are included in the option seller bundle that I have available. It includes cash secure puts, covered calls, credit spreads are here. And even in this is a SPX spreads for daily and weekly profits for those who want to trade SPX, maybe 0 DTE or weeklies. You can do that as well. If option selling is completely new for you, if options itself is completely new, this bundle also includes options 411 and it includes the basics of short selling. And you get to create you a trading plan. Go over to educatortotrader.com and you can grab this option seller bundle today. All right. Don't forget to like and subscribe. Bye.